Of you are worried about what negative impact a Deutsche Bank collapse could have on the financial system. Of course, that's a big one. But the issue foremost in many of your minds is what would happen to your DBX index trackers if Deutsche Bank did go broke. Narina Fisser, if we get hold of her, we'll chat to her. But Warren Ingram is conveniently in studio. We're ahead of our conversation later on. What would happen to DBX trackers?
It's a great question because there are two parts to this to these DBX trackers. The original grouping of them are exchange traded funds.
They're like unit trusts.
In fact, they really are unit trusts. Okay. They're actually they're unit trusts that happen to trade on the stock exchange as well. And the wonderful thing about a unit trust and these exchange traded funds is that the only people that own an exchange traded fund are the people that put money into those funds right in the beginning. So the fact that Deutsche Bank might have launched them and might earn a management fee doesn't mean that if Deutsche Bank goes bankrupt, Deutsche's creditors have no rights to the money sitting inside those exchange traded
funds. In
the
same way as if you are a client of Old Mutual and it goes bust, or Coronation and it goes bust, or Sanlam and it goes bust, and you own one of their unit trusts, that money is ring-fenced. It is secure. It doesn't matter what happens to the company that's issued the product.
Yeah, and that's why they were called, that's actually why the phrase unit trust, because it's owned eventually in a trust. So that the assets are held in trust for the owners of the fund. So the unit holders, and in this case, you would own those, and that's great. It's a bit more concerning though on the other types of investments called exchange traded notes.
So you got ETFs on one side, exchange traded funds, and then ETNs, exchange traded notes. Now these look the same, they smell the same, but they're different.
They are different. And so they've been sold to us as investors because they don't carry a management cost. They don't have an explicit fee. And so you get told that, if you buy this thing and it tracks, let's just say the all-share index, it will do exactly what the all-share index does. You will get exactly the return of the all-share index. There will be no tracking error, which is usually the management fee charged by the company, and then their implementation when they're buying and selling the underlying investment. So that's great. The theory of an exchange-traded note is wonderful. However, what happens is that is given to you and underwritten by the provider. So in this instance, Deutsche Bank says, we promise to deliver the performance of that index to you.
So the risk is, if Deutsche Bank does go bust, or any provider of a product that issues you with an ETN, your money is at risk.
And that's what's not clear. That's what I can't find information on. Have Deutsche Bank, for example, hedged that out completely? Have they underwritten that with somebody else? And so, you might find that there's actually no issue here at all. And it would be prudent for Deutsche to actually put something out in South Africa to say, listen, there's absolutely no risk here, or there is. You've got this exchange traded note, and the balance sheet is Deutsche's, and we're going to honor this thing. And that's what we need to find out. That's what we're not hearing from.
Well, if somebody can help us out on that, if you've got a clue as to what the position is with the ETNs versus the ETFs, we'd love to hear from you.
I think just one note. I mean, to put most people at peace, we've had an example of this in South Africa's history on the exchange traded fund side. When Fidentia got hit the wall.
J. Arthur Brown with Fidentia. Yeah?
J. Arthur Brown. That Fidentia owned a company called AOS, which was an administration company of unit trusts, and it got sold. I think it was within 3 months. Unit holders were pretty much unaffected. There might have been some administrative issues, but no money was taken out of the funds inside those unit trusts, and it was sold on. And I think that's what's going to happen in a situation like this.
If Deutsche Bank did go bust, which is not necessarily is going to go bust, although the regulators in Germany said we won't bail out this thing, they might have to if there's continued pressure on it.
And I think that's a very attractive business for lots of providers here to buy. So I think that that it would be something that would carry on. There's no flaw in those investments themselves. So I think to me, would I go and buy a whole lot of exchange traded notes now? I think I'd be very careful on those DBXs. But would I buy the DBX funds? I don't think it would bug me too much. And would I sell the ones I've got if I want to hold them for the long term? Definitely not.
There we go. Warren Ingram this evening on a double shift.